We're talking about interest rates today in the US and in Australia with John Abernethy. John, what do you think caused the US Fed, Ben Bernanke, to postpone the tapering of QE?
Yeah, well, there's a whole lot of reasons. The first reason is the Federal Reserve is now lowering its expectations of growth. It's looking at the employment market in America, which is slowing dramatically. If you look over last quarter, we're running at about 130,000 jobs a month when we were running at close to 200. So there is a slowing there. I think there is a lot of concern about the debt ceiling, which we're running into in November.
So more grief for the Republicans.
More grief from the Republicans, and Obama has said he doesn't want to negotiate. So that's an issue which they're aware of. So tapering before that is a worry. The strength of the US dollar, obviously they want to reverse that for the manufacturing base. And probably the least discussed issue is that the fact that foreign owners of US bonds are beginning to sell. In the June quarter, they reduced their holdings. And China has not increased, in fact it's decreased its holdings over the last 2 years, and that's the biggest owner of US bonds.
So what are the consequences going to be for Australia? It puts our Reserve Bank in a bit of a bind, doesn't it?
Yeah, well, I've suggested in the past that the Reserve Bank was too slow to cut, and now it's cutting too quickly. And it has ignored all the actions of central banks around the world. The major central banks have been printing currency for the last 3 or 4 years at an accelerated basis: America, Japan, UK and Europe. Now, when they're printing money and we're not, we get this inflated view of our currency for the interest rate market.
And our industry, our exporters become uneconomic.
Yeah, so we debase our manufacturing base. Now, the question that has to be put, why hasn't the Reserve Bank of Australia considered printing money here? Now, we've got an issue with our household debt. We also have an issue with excessive superannuation. We can't get.
When you say excessive superannuation, it's kind of good, but
well, it is, but it's got nowhere to invest. What has to be done is a stimulation of infrastructure in this country. We've got a tapering, our tapering of the cycle in resource capital investment, going from about 8% of GDP towards 3 or 4. That 4% drop needs to be filled quickly to keep the economy going. Otherwise, we'll be flattened by the currency going up again. So I'd suggest that the Reserve Bank sit down with Treasury in Australia and think about a strategy to raise bonds, more debt, and print some money and get going quickly.
And John, is there anything in the Constitution or anything in the Reserve Bank's...
No Reserve Bank can do it at once. I mean, so long as it's consistent with its policy, it's no different to any other central bank in the world. And I just say to you, every other central bank in the world is printing money at present, and we're not. And the question is, why aren't we? And if our future is that secure, tell us about it, because that's not what everyone's reading about in the paper at present.
We don't have to do it forever, but there's no reason why we shouldn't do it.
No, we need to counterbalance what's going on. And the free trade discussions which we love to have with China and America and Europe, it's rubbish when they're printing money. Absolute rubbish.
We're just being completely done over.
That's right.
John, thank you very much.
Thanks.